What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COMS, C-O-M-S, Technicals Thread of Analysis. Before we get started, please subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCab, on Discord. Okay, you guys, let's go ahead and dive right in. Real quick, for those of you who don't speak English, please consider clicking on the gear icon right here in YouTube and make sure that the English is selected so that you can be able to see this auto translate option enabled. This will give you an assortment of different languages for you to consider to choose from, you guys. With that said, let's go ahead and flip the script and dive right into the charts right here, you guys. So we are looking at COMS on the 1-day chart right here, you guys. So price action is looking pretty good, you guys. This is the 7-day exponential moving average. This is a 10-day simple moving average, and we have since converted it into a support form, you guys. The reason we have not moved from this area is because we are touching the knot 618. This is the knot 618 at about 7 cents, you guys. You can see if we actually draw a trend line right at the knot 618 that we are facing some form of resistance right over there, you guys. So also, we have to watch out for the coming session because let's just make sure that is the 30-day. Yes, this is the 30-day exponential moving average, you guys, which is in confluence with our not 786 fib. This can also form as a form. This can also serve as a form of resistance, you guys. So let's go ahead and just watch out for those things. But usually the not 618 is a pretty strong resistance, you guys. This is our inverse golden mean, or the golden ratio. So let's go ahead and move on to the charts, to the next chart, and see what we have. Okay, so we've actually noticed that ticker symbol COMS has been in this descending channel, which is a trend reversal signal all on its own, you guys. So we definitely have test number 1 and test number 2 to confirm that we are within that channel, and we also have made 1, 2, 3 tests of the resistance. If you see, if you're a regular viewer of my videos, you'll know that I talk about the golden rule of 3 very often, you guys. So after the third test of the resistance, we face a capitulation event, or an accumulation, if you will, before a true attempt of a breakout on test number 4, in which we did get. Now, the curiosity laid with me as to why we didn't continue on to testing our newly converted resistance into support from our descending channel. The failure had me curious. So in researching this, I noticed that there was another reversal pattern, a bullish pattern, you guys, living well within the descending channel, and it was the simple fact that we had broken out of this channel on the third test rather than facing the accumulation. So and also we noticed that there was a gap right here in which we just filled. This was very good, you guys. So now notice that we actually reclaimed the descending broadening wedge, and we then broke out on the fourth try, you guys. So this is actually honoring all kinds of stuff right now, and the descending channel now we're right at that resistance. A pretty good thing that I can tell you here, you guys. This is based on candle analysis. We always have to pair this with other types of analysis in order for us to validate moves to the upside or downside, you guys. This is technically an inverted hammer after a downtrend, but since this candle right over here is down to this level, it could technically be an inverted hammer at the top, which would be more like a shooting star. So this can have some confusion right now, you guys. This can actually look potentially bearish to some and potentially bullish to some. But since we are right at the resistance and we are right at the knot 618 on the 8-hour chart, this may actually indicate a potential downside, likely to retest the top of where we had the gap right here at support, and the knot 382 at about 6 cents. Or 60, let's see, about 63.30 to 63.39. In the 6 cents realm, you guys. So now let's just look at some moving averages. Let's load. Okay, so we have made, yeah, we have converted the 7-day exponential moving average in the 8-hour period, but we are facing some resistance from the 30-day exponential moving average. Let's pull up the simple moving averages and see what they have to say, you guys. Simple moving average. Okay, so we are below. I'm sorry, we are above the 10-day simple moving average, which is bullish, but the 50-day is suggesting downside right here, you guys. We're right at that 50-day, and it's holding us back, and the 50-day has confluence directly with the knot 618. This could actually, raw price action is potentially indicating a continuation onto the downside, you guys. So we do have a couple targets to look out for. We do have the 382 and the top of the gap that we recently filled as a support. And we also do have the knot 236 at about at 6 cents. So that's 603, you guys. And aside from that, I don't know that we can continue making on lower lows just yet unless we come back and test this one more time, you guys. But there is support around this area right here, you guys. So I mean, this is a great deal of FOMO combined with catalyst, and so there's likely a lot of people trapped within this area right up here. So you have to be careful as to what we're doing right here, you guys. You can't buy into a supply zone. This is an impulsive move to the upside. So demand could be laying right around here or in this area right here, you guys. We can actually see long positions start to open right here. Another thing that we have to notice is that we are making again a series of higher lows and lower lows. So that's it could be technically a reversal signal as well, you guys, but we do have to honor the fact that it is in a bearish setup. Although we're looking bullish since we're right at the top of this area, we would need to clear the resistance of the channel and have I would say a minimum 4-hour, preferably 8-hour candle closure above this resistance right here, you guys, so that we can be able to continue to the upside. So in other words, I am saying that we need a 4-hour minimum or 8-hour closure above 6 cents. I would say above 7 cents, you guys, in order for us to continue our move to the upside. Let's go ahead and get a bias and direction for COMS. Let's go ahead and start in the immediate short-term time frame. This is the 30-minute RSI, and this is in accordance of what we're talking about within bearish action, you guys. We have made a bearish cross, and we are now going to be trading below the moving average, and we are entering the bearish control zone. This bottom half is bearish control zone. The upper half is bullish control zone. The inner workings of either zones is the weakness percentile, and the outer workings is the strength percentile. So let's go ahead and move on to the bi-hourly and see what we have. Bi-hourly is rejecting the moving average, and it is suggesting a downside. However, it is within the shallow areas of the weakness percentile, so we would have to see how this plays out in possibly a higher term time frame or a micro term time frame. The 15-minute is showing. Let's load it. Yeah, the 15-minute is with a nosedive here, you guys, and it has made a bearish cross. We are trading below the moving average and now entering the bearish control zone. Let's go ahead and move up to the 6-hour and see what it has to say. 6-hour is suggesting a potential sideways trading event right here, you guys. So this could likely be some type of consolidation from the 6-hour period. Let's look at the 8-hour within that same pane and see if it's doing the same thing. Yeah, it is doing the same thing here as well, you guys. When we're within this the shallow zones of either weakness percentiles, the bulls or the bears, think of it as like magnets, right? So we're gonna be, the magnets are right over here and the magnets are right over here. If we're right in the middle, we're gonna be continuously bouncing through these magnets, and that's likely what's happening to the BBIG asset, you guys. We have been until recently trading sideways for weeks. So let's go ahead and look at the 12-hour time frame. 12-hour time frame is also within that shallow area, you guys. There is almost no bias in direction for the overall take. So we're likely seeing some downside movement for the immediate short-term time frame, followed by, let's see the daily. Okay, so the daily is suggesting upside, you guys. So potentially a downside sideways trading day tomorrow, the indecision is likely to the economic data that's going to be released this coming week, you guys. So CPI and other economic metrics I know are going to be released. So this is likely why we're seeing this indecision on a few assets. My mentor actually once told me that if you don't gain the edge on the trade, don't trade it. If it doesn't meet your criteria in your edge, do not trade it. The best way to make money is to keep the money, right? You guys, please take whatever I do show within these videos, whatever I do say as a form of entertainment. I am not a financial advisor. Please do your own DD and we'll be okay, right? Okay, you guys, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, consider joining the ARCa trading community. I'll leave the links in the description below. Visit me on Twitter. And just know that, you guys, there have been impersonators of me, and I will never message you first. I will never ask you for bank information. I will never ask you to buy or sell any asset. But we can discuss these strategy plays within, ideally the Discord, you guys. But I wish you well. I wish you a good night, and I will catch you at the bell mañana. Thank you. Adios.